All right, let's jump right into today's explainer. We are looking at an absolutely massive structural divergence in the Korean equity market today. Right out of the gate, we saw a multi-front risk-off shock hit the market incredibly hard. But then, honestly, something phenomenal happened. Record-breaking semiconductor export data came in, completely absorbed that macro shock, powerfully defended the market's floor, and triggered a highly concentrated institutional rotation. Let's break down exactly how this entire mechanism played out. Section 1. The Global Macro Shock. 7,394. That number right there? That was the KOSPI intraday low. And I really want to emphasize that number right up front because it shows the absolute severity of the initial market drop. The index didn't just casually drift lower, it gapped down aggressively as panic initially took hold of the tape. Because, look, the index collapsed under the weight of 5 converging macro headwinds hitting us all at once. With the US-Iran military exchange escalating and the Strait of Hormuz closed, global markets simply flinched. We saw the Dow and Nasdaq fall roughly 2%, the Korean won weakened sharply to 1,533 on safe haven dollar demand, and rising US 10-year yields, which jumped 3.7 basis points to 4.555%, dragged Korean yields up right alongside them. It was a perfect storm for a sell-off. Moving on to Section 2, semiconductors shield the market. $11.1 billion. Boom! At exactly 9 a.m. Korea Standard Time, the customs agency dropped their trade data for the June 1st through 10th window, and semiconductor exports reached a staggering $11.1 billion. To put that in perspective, this is the highest print for any June 1 to 10 window on record. Because of this, the semiconductor share of total exports surged to 38.7%. That's up 15.1 percentage points from the prior year. But here's the kicker. The really crucial point is this massive year-over-year percentage gain, positive 205.8%. That specific data point literally acted as a circuit breaker for the market panic. It completely reversed the sentiment, instantly converting what felt like a terrifying selling gap into a direct, high-conviction buying opportunity. Retail investors saw that massive export headline and took it as undeniable confirmation that the morning's bloodbath was just a temporary macro shock, not some fundamental breakdown. They stepped in at the absolute bottom and aggressively accumulated 2.08 trillion won worth of stock. This buying pressure drove an incredible 4.98% move directly off the intraday low, dragging the KOSPI all the way back into positive territory. It's a pretty amazing reminder of how hard data can instantly override emotional market panic. Now, we actually need to pivot to an even more critical leading indicator hidden inside that data release. Over that exact same time frame, equipment imports, specifically the heavy machinery needed to fabricate microchips, rose 52.2% year over year. This matters immensely, folks, because it signals that a highly active physical AI infrastructure pipeline is being built right now. Think about what this means for physical hardware. When Korean memory producers import more fabrication tools, they aren't just sitting on them. They are actively ramping up production lines for advanced chips, like the HBM3E memory. This creates a really powerful positive feedback loop. Accelerating memory output directly translates to rising order intake for domestic tool makers. When those equipment imports spike, domestic process tool manufacturers and substrate suppliers usually see their order growth surge within just 1 to 2 quarters. And the institutional reaction? Crystal clear. While retail investors were busy saving the KOSPI large caps, the institutions parsed that equipment import data and immediately poured 696.1 billion won specifically into KOSDAQ front-end equipment and substrate names. Stocks like Jusung Engineering, Wonik IPS, and Simtech posted massive 20+% gains, driving the KOSDAQ up by an astonishing 4.76% on the day. Which brings us to Section 3. Expiry caps the recovery. So why didn't the market shoot the moon? Well, the ceiling was enforced by a strict mathematical inversion. The theoretical value of the KOSPI 200 basis was slightly positive, at plus 0.09, but the actual basis forcefully inverted down to negative 1.03 points. In plain English, futures became cheaper than the actual stocks, which created an unavoidable structural headwind that effectively capped the retail-driven recovery. And that mathematical inversion triggered an absolute avalanche of automated execution. The computers basically took over, generating nearly 2 trillion won in non-arbitrage program selling, plus another 422.3 billion in arbitrage selling. This massive wave of algorithm-driven offloading is exactly why the KOSPI ultimately underperformed its own underlying buying flow, closing up just 0.43% despite that heroic recovery off the morning lows. All right, part 4, uncovering hidden market signals. There is a glaring anomaly in the foreign flow data that we really need to talk about. Foreign investors dumped a net 594.8 billion won of SK Square. That represents over 40% of their total KOSPI net selling for the entire day. But in the exact same session, that same foreign investor pool bought a net 55.2 billion won of SK Hynix. This is a massive internal contradiction happening within the exact same sector on the exact same day. Now, this isn't just some random quirk. It is a calculated shift to direct factor loading. See, SK Square's primary listed asset is its equity stake in SK Hynix. By aggressively selling the holding structure and buying the underlying asset directly, foreign investors are intentionally stripping away the holding company discount. They are actively positioning for cleaner, direct exposure to the accelerating memory cycle right as the customs data confirm that explosive growth. Smart, right? Finally, we have to zoom out and map the massive structural liquidity drain happening globally. Foreign investors have now sold KOSPI equities for 24 consecutive sessions. They've offloaded 1.48 trillion won, alongside heavy selling in Korean bond futures. Why? Because on June 12th, SpaceX is scheduled to IPO on the Nasdaq at a staggering $1.78 trillion valuation, with a $75 billion offering size. Passive funds tracking major global benchmarks are being structurally forced to liquidate their existing positions in Asian IT equities and bonds simply to fund their required SpaceX allocation. It's literally a mechanical drain overriding local fundamentals. So, what does this all mean? The ultimate question remains. Once this massive SpaceX liquidity drain is finalized on June 12th, will the explosive fundamentals of Korean memory chips finally be unleashed from their structural chains? Or will a brand new macro shock take its place? If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.